y'all. My name is Malina Bercher. I am your Texas Hill Country Patriot Realtor, and I'm feeling a little farmerish. Today I was checking on the cows. I'm coming at you live from our little family ranch here in Bulverde, Texas. I'm a transplant from Hawaii to Texas back in 2020, and since then I'm passionate about sharing my love of Texas Hill Country, the freedom it affords, the beauty that you experience from living here with you. So if you have an interest in moving to Texas, if you're here and you have real estate needs, then I'm your gal. But today, I have the privilege of sitting down with one of my most favorite people in the world. Her name is Hillary Musali, and she just happens to be an expert in lending and all things mortgage related. So we're gonna sit down and talk numbers. Have I missed the opportunity? If you were thinking about moving to Texas, you haven't pulled the trigger, should I wait? Heck no! We answer all these questions and more, so looking forward to sharing this video with you. And if we don't answer your questions, feel free to drop some in the comments below and we'll get back at you as quickly as possible. Enjoy the video. Howdy everybody. Hi y'all. I have Hillary, my favorite loan lady, sitting next to me. And we're coming at you live from beautiful Stone Oak in North San Antonio in the, would you call us like the lower Central Hill Country area?
Yeah, the bottom of the Hill Country.
Yeah, the very beginning of Hill Country. Yeah. So we're coming at you today because I keep getting asked what the heck is going on with mortgage rates, and so I thought I'd pull in a professional. Who was it? Henry Ford, who said, I don't know everything, I just get very intelligent people around me who are experts in that, and then they give me the answers. And so that's why I'm sitting here with Hillary, because she is an expert in mortgage lending. I actually entrusted her with my purchase of a home. My husband and I purchased our dream home last year, and Hillary got us an amazing rate and locked us in, and the rest is history. So all my clients, I give them the option of dealing with Hillary. And so we're here in Central Hill Country, and we were just talking about it. It is God's country.
Yeah, Central Texas, or the Hill Country, is a lot of people coin that phrase, God's country, because it's just so beautiful, and you have gentle rolling hills and wineries and scattered around.
It's amazing. And anytime I'm driving around with somebody from out of town, they say, I had no idea Texas was like this. And it really is. I'm from Hawaii. And so people say, you moved to Texas from Hawaii? Oh my gosh, it is so beautiful here. And finding these little hidden gems everywhere. Every time I drive a client around, it's just amazing. So, but what we're here to talk about today is mortgage rates. So we have some questions. I went to Hillary and I said, here's all the questions I've been getting, which you probably have. And if you have any questions we don't cover, go ahead and put them in the comments and we'll try and get you an answer as quickly as possible. But today is May 13th, 2022, and we're going to get you some very timely information on mortgage rates and what the heck is going on here. So one question I get all the time, Hill, is, will rates hit 6%, 7%, 8%? How high are they going to go?
Yep, and that's a really good question. If I had a crystal ball, then I'd probably be trading money on Wall Street or doing something different.
Vegas.
Or just playing the tables in Vegas. But seriously, I think that it's really hard to say. I think absolutely we'll see 6. We already have customers that are slightly over 6, depending on FICO score, loan to value, type of product that they're looking for. If someone is needing a bank statement program or something a little bit more non-traditional, they're already in the 7s.
Okay.
So we are definitely going up. I think the norm will adjust back to about 8% before it's all said and done. So when you look at the opportunity to lock in the mid-5s, it is still a tremendous opportunity.
And before we went into this discussion, we were looking at historically speaking, right? Historically speaking, rates are low. They're still low. The average Up until a few years ago was 6%.
Was between 6 and 8%. So
Okay.
that was the norm. End of 2018, we were already seeing that average come back, where rates were right around 6. And then there were some financial things that caused us in COVID that caused the rates to kind of back.
Everybody wants to blame
down,
COVID
so,
for everything, don't they?
You know.
And now we're blaming Russia. But right. Let's see. The war might throw in some throw us a curveball. But you know, and we're going to deal with that a little later. Is should I wait? Right? Is it a bubble and all that kind of stuff? Because inventory comes into play, and there's a lot of stuff that comes into play that we're going to touch on. But basically, when we look at rates, yes, they're at 6%. Yes, I got locked in at 2.78. Right? Me and my husband got locked in at 2.78. We were and I'd love to brag about that, but if you know, hook up with that's you know what's really great, a benefit about hooking up and with somebody like Hillary is they can keep you in the loop on new products, right? And that leads me to the question: why would somebody work with you, Hillary, with guaranteed rate over going online or going to a bank, even if they have a great relationship with their local bank?
Right. And so I spent many years at a bank, and I would say that banks they're a good resource. However, it's more corporate, right? Their timeline is going to be slower, more cumbersome. They hit more buckets for federal eyes to be on. Not that we're not following rules, but banks tend to have extra layers of rules, and a much more conservative approach. There's a lot of product that I have now that I that wasn't available when I worked for a bank, and so it's only to a customer's advantage to go sit down with someone who can really give you advice. Banks discourage their loan officers from actually giving advice because that could be considered steering. And so really I'm never trying to steer my client into a certain product, but I'm trying to educate. And so being able to sit with someone who's available on weekends, who gives out their cell number, who actually is part of
and she
your
does.
team,
let me tell you.
So, everybody has my cell. That's the only number I use, actually. And I would just say a plug for any local loan officer that's not bank. That most of us do work the same way, but not all of us are created equal, right? You want someone who's responsive, who's okay sharing your cell number, and who really who knows
everybody
the game,
has my cell
right?
number.
Who knows the game, right? Who's going to advise you and be part of that when you find a house.
Right.
And y'all are talking about what do we offer and what's our strategy. There's things we can do, like deciding if are we going to need an appraisal, do we not need. We can really get in the weeds and plan before you make that offer.
Okay, great word. So I want to move into what do the rising interest rates mean for the average home buyer, right? As far as, and we were looking at what we would be paying, my husband and I would be paying now. Had we locked in at these rates versus, back in December, it would be an increase for us of about $1,400. But we also did some math before the talk today, and it was crazy what our home appreciation would outpace that in no time. So I think within a year, our home price would outpace that. I think we ought to open that up.
Our light just went out.
And that's the thing is you have to take a lot of factors in, and when people ask should we wait, my answer is no.
My answer is no.
And
absolutely
we've
not.
got 32 years of combined experience
in
the industry, and the answer is no, because a lot of factors come into play as well is how fast are rents increasing, right? If you're renting something and wondering if you should continue renting before you buy, you're going to be paying it more into that monthly just to rent. And we talked about the bubble too. If you have bought before the last bubble, and I don't want to insinuate there's any bubble coming, but before the crash back in 2009?
2009-ish.
Yeah. Then you would be a very happy camper now. And so it's just, what is your intention of buying? Is it to buy a home that you're going to live in for the next 5, 10, 20 years? If you're looking to flip it in the next year and make 20%, like back in 2021, maybe not. I don't know,
Right.
but
I think the trend is going to be, we've had insane appreciation, right? 21, 25% over the last couple of years, especially in this area.
right.
And I think the new norm may be back to that 5 to 8 appreciation every year. But even with that into consideration, some analytics that we were looking at right before we jumped on is that even if you're offering more than the list price, there's a potential that you're breaking even in less than a year. Because of that appreciation.
Yeah, and 10% above asking price is getting you is putting you ahead of the game in 7 months. In some cases. So, and one thing that we were looking at too is the national average. I think was appreciation in 2021 of, what was it, 17%?
17 or 19%.
19%. In Hill Country, Texas, it's 21%.
Yeah.
So one thing unique about Texas Hill Country is we have an influx of 3,800 people a week moving here. A net influx. There's people leaving, attrition, but overall 3,800 new people are staying in Texas every week. And so a lot of places, other places in the country might be softening a bit, but the demand is still crazy here, especially supply and demand. So national average, I think we have, 2 months supply on the market. Here in Texas is 1.4, and here in Hill Country, Texas is 1.2. 1.2 months of inventory. So, and overall, a healthy market would be 5 to 6 months. So it's still,
that's going to keep our values up.
Yes,
it has to. And then the rates really aren't in bad shape. They're still single digits, right? So if you guys look back at the 80s, they were double digits. When I started in this business, it was still double digits for interest rates. So if you can get in at half of that, it is a great time to be buying a house.
100%. So some of what we were looking at is, what does a change in a $400,000 loan look like? It's a little lower than the Hill Country average, but right around the national average. $400,000 loan at 3%, $1,686. Where are we at right now with a conventional loan, Hill?
Probably the low fives.
Okay, so we're looking at just around $2,147, so to $2,398. What do we have? Like a $712 difference if it hits 6%.
About $700, right? And then compound that with home values rising, and it's closer to $1,000 gap in what it would have been a year ago.
So you are, but you haven't missed the boat. So you're going to pay more, just being straight up with you, but you haven't missed the boat because home prices are still strong and they're still increasing. But hopefully they don't increase at 21%, because that's going to price a lot of people out of the market with the larger interest rates.
Right.
Moving on, the equity growth outrunning your mortgage. So basically, that big question, should I wait it out? And back to no. Nope. Strike while the iron's hot.
Yeah, I would say inflation is going up faster than our rates. So it's time. You need to just jump in, buy, don't hesitate, because hesitating is only going to cost you more money down the road. So,
right.
And buying today is going to make you more money.
And you ask, like, should I have bought last year? Yes. Should I have bought this year? Yes. Should I buy next year? Yes. Because it's a hedge against inflation, like we said. I mean, interest rates are still lower than inflation rates, right? We're like, where are we, around 8.5 inflation? If you look at
a very conservative average. I think it depends on how you calculate. If you take out the gas prices and
funny story. I left my wallet yesterday at the car wash. Luckily, and then I was on E. Luckily, they had my wallet. I get to the gas station because I was on E, and you know how it tells you how many miles left you had. I had 10 miles left. I had $3 in my purse. Luckily, So I go into the gas station and I'm so embarrassed, and I give the guy $3, and he's like laughing at me because my card takes premium.
Not even a gallon of gas.
It's like $5 a gallon for premium, and it added 5 miles to my set. It's down to 10. It added 5 miles for $3, and I don't know how accurate that was, but it was really sad. Anyway, back to inventory, or what we were talking about. Inflation, I forget. Anyway,
inflation.
Segue.
Yeah.
All right.
I mean, I would say that inflation's probably closer to 12 and a half.
Oh
13%.
my gosh. Okay.
It just depends on who's doing the numbers. Right?
So here's a little chart we had on inventory, just to give you some visual for, inventory is still at historic lows, especially here in Texas. We're definitely below the average. All right, Hill. I hear it all the time. How can I compete with cash offers? So I want to talk about, where's all the cash coming from? What if somebody has a home in another state with equity? What are some creative ideas that they can do to maybe, make their offer more attractive? And I know you're the queen of pre-qual, and then so let's talk about that a little bit.
Yeah, so there's finding the right lending team that's willing and committed to seeing this all the way through before you even have a house. We're able to lock rates before you find a property. We're able to put your loan completely through underwriting before you find a property. So then
and that's what she did for us.
Yeah, and then you're out shopping and you are actually competing with cash offers because you have 0 days of financing contingency that you can offer because your financing's in place.
Right.
So it's a beautiful thing. Not all lenders will do it. We've actually rebranded ours to the Power Bid, which is, and we have like a cute little approval letter that goes along with it. And I think you guys had something like that.
Well, let me tell you, I talk to agents all day long who say, I've written 20 offers and I can't get my client's offer accepted. I can, because I've got Hillary. I mean, she's got the tips and tricks, and she does deal directly with the underwriter and make sure all your I's are dotted and T's are crossed, and you can compete with those offers because they know it's going to fund when it comes from Hillary.
Yeah, and I like to say that you guys don't need to see the donuts being made. You just need to eat them at the end.
I love that. Oh, keep those donuts far from me.
Yeah, and we start the prep and cooking before you actually go under contract. 'Cause there's a lot of things that you're going to have to do, right? There's inspections, there's just different things, moving and coordinating and measuring for different furniture and blinds and whatever else you're getting for the house. So I would rather you have all the finances straight before you start that process. Otherwise, you're still working, and now you've got not only getting ready for the house and the move, but trying to get your finances in order. If we can just kind of break it down and make it a little more simple, it's a little more stress-free for you guys.
Definitely. So. Well, so if you're an agent out there looking to work with a creative lender, here you go. And if you're a potential home buyer or somebody in another state considering moving to Hill Country, Texas, here I am. And I know I'm going to point you directly to Hillary and find out how much we can get you approved for and what we can get you fit for, and then we can find you that perfect home. So if somebody is thinking of buying and they're just kind of considering it at this point, what would you say are the best things they can do to posture themselves? Should they do anything before they come talk to you, or should we just set up an appointment with Hillary and get right in?
I would say don't try to second guess yourself. Just get in with the loan officer, that would be me, as soon as possible, and let's just make a plan. Let's see where you are. I would, some tips, I would say be hesitant to make a major job change. A good time to start a business is not right before you go shopping for a house.
Just the obvious, don't open any new credit cards, don't buy any new luxury vehicles.
Well, but time and time again I see where people say, hey, well, I quit my W-2 salaried plush job because I was just fed up with management and whatnot. And I'm consulting now, and I'm making 10 times I was before, but they've only been doing it for 1 or 2 months, and that's just not the right time to buy because we don't have that history of being self-employed. So there are certain cases where you can switch jobs, but I would say, again, consult with the loan expert or even your realtor. Have the conversation. If you're serious about buying a house, that needs to be considered first. And if you want to upgrade your car, after the house, right? Appliances after you have keys in your hand.
Oh, that's no fun.
Yeah, so all of that stuff
I love to shop. You're talking to a shopper here.
You can bookmark, but you can't buy until we get there. So
leave all your shopping to the house, right? You got to shop on the house. Wonderful. Well, bottom line is, buyers, should I wait? No. Hell no.
Nope.
Come on in, the water's fine. Hill Country, Texas is beautiful. God's country. We'd love to have you. Reach out to me, Malina Bercher, Realtor, powered by EXP, or Hillary Musali here. And especially if you're an agent, like I said, looking to partner with an amazing loan broker, you got one right here in Hillary. So much love from Hill Country, Texas.
Howdy, so